Hello, I'm often curious of how much gold is worth, especially during economic uncertainty time. In this video, I would like to share my observation based on historical gold price and corresponding economic data. At the end of the video, I wish you can also come up with your own ideas of how much gold is worth. We will only use public available data to see what is the story behind the fluctuating gold price. As we know, gold is valued by US dollar. Before Bretton Woods system collapsed in early 1970s, US dollar was backed by gold. Gold was fixed at 35 US dollar per ounce. So what will be gold price if we compare current US dollar supply and the amount of mined gold reserves today? We can use this simple equation. Use US M2 supply divided by world gold reserves to come out the gold value. First, we need to know how much world gold reserves. As we know, 2019 gold reserves is 190,000 tons, and with estimated 3,000 tons of gold production in 2020, so we can get about 193,000 tons, or 6.8 billion ounces of world gold reserves in 2020. And according to Federal Reserves, US M2 money supply is 18,811 billion US dollar in October 2020. Then we get the gold value is about 2,763 US dollar per ounce, which is much higher than recent gold peak price at about 2,000 US dollar. What about if we use US money supply and US gold reserves instead of world gold reserves? As we know, 2019 US gold reserve is about 8,133 tons according to World Gold Council. And we can use the same M2 supply. So the new gold value based on US gold reserve is about 65,569 US dollar per ounce. Apparently, this value is significantly higher than the recent historical high. We just analyzed the spot gold value based on recent M2 and gold reserves. Now let's look at the historical gold price and history money supply. In this over 40 years trends, gold is in yellow color and M2 is in blue color. As we can see, gold price trend around US M2 in upward direction. We can also see 2020 both gold and M2 are overlapped. This is in upward trend. This is due to fiscal policy during 2020 pandemic. One important thing need to be mentioned is that in this graph, both gold and M2 are in different vertical axis and a different scale, which means these two trends can be at a different relative position if scale being changed. Now let's tweak this M2 supply a little bit, so both M2 and the gold price trend can fit on the same axis. As we can use 2019 world gold reserves data and assume gold annual production increase by 1% and use about 2 data to back calculate historical gold reserves. This is not the actual data, only for comparison purpose. With US historical M2 supply, and then we can come out the historical gold value. This is the estimated gold value based on M2 supply. We can use it to compare with the actual gold price. So this is the graph with both gold value based on M2 in blue color and actual gold price in yellow color on the same vertical axis. As we can see, the majority of the actual gold price is below the gold value based on M2, and there are only two time periods exceeded. Very interestingly, in the first circle, in the year 1974 to 1975, which is just after Bretton Woods system collapsed, the gold value based on M2 is very close to actual market gold price at around 200 US dollar. The second circle is during 1979 energy crisis with high inflation. And the third circle is the second highest gold price from 2011 to 2013. This is after 2008 financial crisis. And the last circle is the recent highest gold price after pandemic, with a huge jump of M2 supply. The gold value based on recent M2 is about 2,800 US dollar, which is much higher than recent highest gold price. As we know, gold is priced by US dollar, and US dollar strength is measured by dollar index. So, what is the US dollar index? According to Wikipedia, the US dollar index is the measure of the value of the United States dollar relative to a basket of foreign currencies, often referred to a basket of US trade partners' currencies. This graph shows a smaller time scale in 2020. We can see that gold price is in very good inverse relationship with dollar index. This is over 40 years time scale of dollar index and the gold price trends. Dollar index trends down in general and the gold price trends up in general. We can examine on individual major trend and see how they correspond to each other. In this time period, the gold price and dollar index is in inverse relation. This is in inverse relation but not proportional. Again, inverse relation but not proportional. Not much correlation here. Inverse relation but not proportional. Inverse relation but not proportional. Inverse relation. Inverse relation. Again, inverse relation. Inverse relation. Not much correlation here. Inverse relation. Inverse relation but not proportional. So, as we went through previous graphs, most of the time, gold price is in inverse relationship with dollar index. This is also our common sense. However, there are times gold price is not in proportional relationship with dollar index, which means something else also contributed to gold price changes. Another most important factor is monetary policy or interest rate. This is the trend shows interest rate and gold price from Fed web. In the first green box, we can see gold price increased during high interest rate period when inflation was very high. And start from second green box, after energy crisis, interest rate decreased from historical high to recent almost 0%. And in the third red box, short after interest rate dropped to close to zero during financial crisis, gold price increased exponentially. Now, let's look at the 10-year Treasury yield curve corresponding to gold price. This is 10-year bond yield curve from Fed website. Like Fed interest rate, 10-year bond yield also decreased since 1980s. As we can see in the third green box, bond yield fall below 3.5% after financial crisis, and the gold price increased historical high level. Let's look at the stock market with gold price. As we can see, stock market in general trend up. Not good correlations with gold in general. So, here is what we can see from above history data. Gold price has good inverse correlation with dollar index, but not in linear relationship in long-term trend. Gold price trended around money supply in the long run. Gold price trended very high when the interest rate is close to zero. We often hear two different opinions about gold, like Warren Buffett and Ray Dalio. So, what is your opinion about how much gold is worth? And thanks for watching. Hope you enjoyed this video.